price target. We'll have the graphics up in a bit. Tushar Pradhan is with us, director at HXGON Partners. Tushar, good to have you with us here. Good afternoon. I mean, it's just a waiting game now to tomorrow and then on Tuesday. Your thoughts? I mean, markets, of course, building in continuity, etc. But the question really is, if you get the base case, is there a whole lot of upside here, or do you think, as someone was suggesting earlier, we perhaps may just sort of fade the initial move after a day or two because a lot is already in the price, built in?
Yeah, I will have to agree with you on that, because what has happened over time is that the markets have assimilated the potential for the Indian economy over time and its valuations. So the event really is not going to drive or sustain the valuations to say that this is it. It is going to continue to fluctuate even after the markets end, after the counting of the election is over. So that just will remain an event, which is like so many other events in the market. So I think an excessive focus on what happens on Monday and what is the tally, etc., probably will last as excitement only for that day alone. And I'm sure that Tuesday will be another day where something else will become the focus. So I think the overall understanding for most people in the market should be that what is the valuation? What are our average valuations? Are we more or less near where I would say fair value? And then take a call whether the expectation of returns from here on will really depend on the earnings growth that one can think of. So I think it is back to basics. The elections come and go.
Mr. Pradhan, afternoon, Reema here. Assuming political continuity, the last 5 years of the Modi government, the thrust was on manufacturing. And all the sectors and themes associated with manufacturing were the leaders in the rally. Do you think in the next 5 years it will be, manufacturing theme which will continue to drive gains, or is there going to be a change in what the thrust of the government is going to be, which could drive a new set of winners?
Yeah, that's an interesting question, because when you mention manufacturing as an agenda, I think it was more led by the government itself. So we saw a lot of public sector capex. We saw a tremendous amount of capital expenditure in the budgets per se. So the government itself put hard-earned money into infrastructure and real hard assets on the ground. There was always this issue about capital expenditure not being followed up by the private sector throughout this period. And I think what we're seeing is probably the cusp of a change from there on, where the initial expenditure which the government has incurred is leading a lot of private capex to start coming through the system as of now. Because, for example, if you say what enthuses a private capitalist to start putting money in, one is, of course, demand. The other thing is infrastructure. And in the past, if you realize that India has had a pretty challenging infrastructure setup, and I think if someone wants to put in money today, clearly he is looking at a better infrastructure environment than what he was even 10 years ago. So I think what we should probably see is manufacturing, as we call, will shift from the basic manufacturing, which led to infrastructure production in the last few years, to having industrial manufacturing, which is going to be led by secondary demand coming from the demographic dividend, as we call it, as well as all of these new initiatives that the government is taking in terms of allowing for electronics, chip manufacture, and a different kind of hardware setup than what we've seen in the past. So I think manufacturing will continue to remain a theme, but the quality of what drove, I would say, manufacturing and industrial activity in the last few years will change. And I think it will be in the favor of private manufacturing and industry going forward. That would be my understanding.
Okay, all right. So perhaps private capex indeed picking up. That would be the expectation. By the way, the market must point out, look at the bank nifty. It's suddenly surging almost 0.6%. And that surge is largely due to HDFC Bank. That's the one big boy that's moved up almost 1.5%. So Nifty Bank, from those lows, the volatility, it's picked up. And HDFC Bank is responsible, stays high on that one stock. Otherwise, it's still fairly quiet at the index level. Tushar, so since you're quite optimistic on local manufacturing, what are the ways to play it where valuations still leave some headroom on the table? I mean, there are multiple ways, right? You could look at capital goods companies, you could look at infrastructure contractors, you could look at banks for that matter. So what's the best way to play this?
Yeah, I mean, this is something which I think some experience can come to your help. As we understand in the last period where we saw significant private capex come into the market, there were companies which were into construction, into manufacturing, which suddenly went up significantly from a multiple perspective in anticipation of the orders, etc. What similar to what we are seeing today. I think one should not be fazed by the fact that these valuations now are significantly higher than the average of the last 5 or 6 years, simply for the fact that what we are talking about is a sustained infrastructure and a manufacturing boost, which should last for the next 2 or 3 years minimum, which means that the volume and the momentum in earnings will continue beyond the next year. And if that is the belief that this is the kind of momentum that we are talking about, that these elevated valuations will come down as earnings rise. So as you know, the PE is a ratio between the price and the earnings. The earnings today are currently discounting only 1 year forward. So if you say that the earnings should translate into having a valuation multiple incorporating 2 years or 3 years, then the valuation doesn't look that threatening. Of course, the confidence needs to be there that the momentum of earnings will continue. The order flow that we are seeing today and the kind of orders that most of these companies have got will sustain over a period of time, and incremental orders will also continue to accrue. If these assumptions are right, then I think there is a lot more steam to even happen from here on. However, I must caution the fact that the kind of rise that we've seen in these companies, so maybe 100% in return over the last 18 months or so for most of these manufacturing companies on an average, will not translate into another 100% return from here on. But I think if we are able to be reasonable about our estimates for how these companies will operate, I think a decent 15 to 20% average return from here on for the next 2 or 3 years cannot be said to be completely unrealistic at this time. Of course, there will be volatility along the way. But I'm saying this is the picture that one needs to keep, that one's expectation of returns should not be colored by the most recent past. It should incorporate a significantly higher earnings growth for the next few years, have the confidence that the markets readjust to reality over time. And it is not necessary that prices crash from here. It may just be that it will be a consolidating level. And as earnings keep growing up, you are going to be making money in the stock prices in line with earnings growth from here on. So that would be my guesstimate in terms of what's likely to happen from here on.
All right. Hi, Tushar. Good afternoon. Nigel on this side. So since you've spoken enough about the event and its impact, let's look beyond the event then. Telecom companies, they'll be waiting for this tariff increase, which hasn't come in the last 5 years or so. And Vodafone Idea, that stock in the last few minutes has seen a bit of a spike up. And if Vodafone survives, then it's good news for Indus Towers as well. How do you approach the telecom pack? Because clearly, tariff increase is on the cards, and that's post the elections.
Yeah, well, that's something that I'd like to not take a call on, because essentially tariffs are a factor which impacts everyone in the economy. And I don't think there is going to be that much of incentive for tariffs to go up just because they think that they should go up. I think there is a case to be made that India continues to have the lowest telecom tariffs anywhere in the world. I think all of the companies have demonstrated that they've been fair to their customers over a period of time, and that they deserve an increase of tariff or a reduction in some of the I would say charges that the government proposes to have on some of these telecom companies. So whether it is a reduction of these, whether it is an allowance for a higher tariff to happen, whichever way you look at it, I think there is enough case to say that this will happen. But it's not a done deal. And I think over a period of time, everyone should realize that we do operate in a very, very low tariff environment, especially for our customers across compared to any part of the world. And as the ability to afford these services increases across the economy, I think there will be enough reason for the government to kind of look at the tariff situation and then allow for some increases in tariff. If that does happen, clearly there is a tremendous increase for profitability across the spectrum in this sector, simply because it's an extremely high capital intensive operationally leveraged business, which means at any point of time that you have a allowance for an increase in tariff, it hits your bottom line very quickly. However, having said that, technology in this area is extremely intensive in the sense that after 5G, after 6G, you will continue to have to invest in the business going forward. So which means your ROEs will definitely temper the fact that your increase in profits going to be, in some way balanced by the kind of investments that you will need to make after the significant profits that you make. So I think all in all, I would think telecom, just like any other business, to be looked at. All gains here. And for every tariff increase that you can expect from here, we just have to temper it by the fact that there may be some potential capex which will continue to happen in this industry.
Okay, Tushar, thank you very much for joining in. By the way, the telecom